everyone, we are from Group 2 and today we will present our technical analysis of Hong Leong Capital Berhad and Sunway Berhad. We will examine their company background, historical stock performance, price movement, and technical indicators. We will also present our recommendations and explain how these two stocks may contribute to a diversified portfolio. Before we begin, let us introduce our group members. I am Jilin Stanis and I will present Sunway Berhad, and my group member Nur Farahin Sahari will present Hong Leong Capital Berhad. Now I will pass the presentation to Nur Farahin.
Today, I will be presenting the business review, financial performance, stock analysis, and technical analysis of Hong Leong Capital Berhad. My presentations will cover the company's strategic direction, recent financial results, investment strength and challenges, and finally conclude with our overall recommendations. Hong Leong Capital Berhad, or HLCB, is listed on the main market of Bursa Malaysia and serves as the investment banking and asset management arm of the Hong Leong Financial Group. Core businesses include investment banking, stockbroking, asset management, Islamic asset management, and wealth management. Although the company experienced a weaker earning during the latest financial year due to a challenging capital market environment, it continues to strengthen its long-term competitiveness through digital transformation, regional expansions, ESG financing, and wealth management initiatives. HLCB current business strategy focuses on four major pillars. First, digital integration and product diversifications. The company continues integrating its trading applications while expanding its range of investment products through partnerships with international fund managers. It also upgrades its digital loyalty rewards programs to improve customer engagement and enhance the overall investment experience. Second, expanding its market reach. HLCB has increased its retail presence across Malaysia by establishing new trading hubs, particularly in East Malaysia and East Coast, including Kota Kinabalu and Kuantan. At the same time, it is targeting international retail investors through its online trading platform, HLE Broking, allowing investors to access Malaysian capital market digitally. Third, accelerating digitalizations through artificial intelligence. The company has adopted AI-powered predictive risk monitoring system. These technologies improve operational efficiency while helping reduce the cost-to-income ratio. Additionally, HLCB has fully digitalized account opening for both conventional and Sharia-compliant trading accounts, making the onboarding process much faster and more convenient for customers. Finally, strengthening ESG and asset management, HLCB continues to position itself as a leading arranger of sustainability-linked bonds and green sukuk, supporting Malaysia's transitions toward a green economy. Through Hong Leong Asset Management, or HLAM, and Hong Leong Islamic Asset Management, known as HLASAM, the company provides diversified investment portfolio based on a bottom-up stock selection strategies. Furthermore, HLCB collaborates with independent unit trust advisor, or IUTS, enabling broad distribution of its investment product nationwide. Overall, these strategies initiatives demonstrate management's commitment to building long-term sustainable growth despite current market challenges. Next, let's look at the company's stock profile. Currently, HLCB share price is trading at 3.09, which is very close to its 52-week support level of 3.08. One of the company's strongest valuation indicator to its price-to-book ratio of only 0.7 times means investors are purchasing the company shares below its net tangible asset value of 4.39, suggesting that the stock may be undervalued. In addition, HLCB continues to provide attractive shareholders' return with an expected forward dividend yield of approximately 6.15%, making it appealing to income-focused investors. Therefore, despite weaker earnings, the market valuation remains relatively attractive. Now, let's review the company financial performance. The financial year reflects a difficult operating environment across Malaysia and an Asian capital market. Gross profit declined from 270 million in 2024 to 217 million, representing a 19.6% decrease. This decline mainly reflects the lower investment banking activities and weaker capital market conditions. Profit before tax decreased from 122 million to 78 million, a decline of 36.1%. Although profitability fell significantly, operational expenses remained relatively controlled due to AI implementation and improvement in operational efficiency. Profit after tax declined from 98 million to 58.4 million, representing a deduction of 39.6 million, approximately 40% year-on-year. The decline illustrates the pressure faced by investment banks during periods of reduced trading activities and fewer corporate transactions. However, despite weaker earnings, HLCB maintained shareholder confidence by declaring a dividend of 19 cents per share, amounting to approximately 46.9 million in total dividend payment. This demonstrates management commitment to delivering consistent shareholder returns. Moving on to the stock price and dividend performance. Although HLCB experienced a 40.4% contraction in net profit, investors continue receiving an attractive dividend yield of 6.15%, supported by a dividend payment of 90% per share. The company remains attractive because of three important factors. Firstly, its discounted valuation with a price-to-book ratio of only 0.7 times. Second, continuous investment in digital transformation and AI integrations. 3. Long-term growth opportunities through regional expansion and ESG financing initiatives such as Green Sukuk. Therefore, HLCB can still be viewed as a value and income investment despite short-term earning pressure. Let's now examine the company's strengths and challenges. Firstly, HLCB has a relatively small public trading float because most shares are controlled by its parent company. This limits trading liquidity and reduces analyst coverage from major research houses. Secondly, company earnings are highly dependent on the capital market activities. When a Bursa Malaysia experiences lower trading volume or corporate deals activity slows, HLCB profitability is directly affected. Thirdly, the company currently has a relatively high dividend payout ratio of approximately 77%. This means dividend payment rely partly on the accumulated cash reserve rather than entirely from current operating cash flow, creating sustainability concern if weak market conditions continue over several years. Finally, the board has experienced limited refreshment with no significant changes in directors over the past 3 years, potentially reducing governance dynamism. Despite these challenges, HLCB also demonstrates several strengths. First, valuation remains attractive with a price-to-book ratio of only 0.7 times, while the net tangible assets stand at 14.39. Secondly, its dividend yield of 6.0 to 6.15% remains higher than many companies listed on Bursa Malaysia. Thirdly, the company continues maintaining healthy operating efficiency with gross margin exceeding 60% and operating margins above 90%, reflecting disciplined cost management despite softer market conditions. Now I will discuss the technical analysis. Between March and July 2026, HLCB showed a clear bearish trend. The share price declined of approximately 3.36 before entering a sideways consolidations between 3.20 and 3.30 throughout April. Brief recovery occurred in early May, reaching approximately 3.35, but the rail failed to break resistance. Selling pressure then intensified throughout June, producing a series of lower high and lowest low. Finally, the stock closed at 3.09, almost exactly at the major support level. The descending trend line clearly confirms the ongoing bearish trend. Only a decisive breakout above this trend line with a strong trading volume will indicate a possible trend reversal. The major support level is 3.09, where buying interest has repeatedly emerged. Meanwhile, 3.35 acts as the key resistance level. A successful breakout above 3.35 will provide the first technical signal that bullish momentum is returning. The trading volume remains relatively low. This suggests that while selling pressure has weakened near support, buyers have not yet entered aggressively. Therefore, investors should wait for higher trading volume before confirming any breakout. Now, I will explain the technical indicators used to evaluate Hong Leong Capital Berhad or HLCB. First, let's look at the 10-period exponential moving average or EMA. This is a short-term moving average that places greater emphasis on recent price movements, making it highly responsive to market changes. Currently, HLCB share price is trading well below the 10-day EMAs, which is followed the recent downward candlestick movement. This indicates the short-term momentum remains strongly bearish, with sellers maintaining control over the market. Next is the 100-period EMA, which is measured the long-term price trend by averaging the last 100 trading periods. The 100-day EMA is approximately 3.27 and continues to slope downward. Throughout the observed period, the share price has consistently remained below the 100-day EMA, confirming a clear long-term downtrend. In technical analysis, this moving average also acts as a dynamic resistance level, meaning any upward movement is likely to face selling pressure near 3.27. Moving on to the moving average envelopes. This indicator consists of a central moving average with upper and lower bands that help identify normal trading ranges and potential overbought or oversold conditions. The middle line is around 3.17, representing the 20-period moving average and indicating a bearish to neutral medium-term trend. The upper envelope located above the middle line serves as a dynamic resistance level. If the share price moves above its band, it may signal an overbought conditions and increase the likelihood of a price corrections. The lower envelope is at 3.09, which is act as a dynamic support. Since the current share price is trading near this level, it suggests the stock is approaching an oversold conditions where buying interest could also begin to emerge. Finally, let's examine the Bollinger Bands, which measure market volatility using a 20-period simple moving average and two standard deviation bands. The middle band is 3.17, represent the short to medium-term trend. The upper band is 3.25, acting as dynamic resistance. If the price reach or exceed this level, it may indicate that the stock is becoming overbought. The lower band is 3.09, which serves as a dynamic support. HLCB is currently trading very close to its lower band, reflecting a strong selling pressure and an oversold market conditions. While this confirmed bearish sentiment is also suggests that the downside may be limited and the short-term technical rebound could occur if buying volume increase. In conclusion, all four indicators, the 10 EMA, 100 EMA, moving average envelopes, and Bollinger Bands, indicate that HLCB remains in bearish trend. However, because the share price is trading 3.09, which is both the lower envelope and lower Bollinger Band, the stock is approaching an oversold region, where a potential technical recovery may occur if market sentiment improves. Next, I will present the momentum indicators used to evaluate the current market sentiment and price momentum of Hong Leong Capital Berhad or HLCB. First, let's examine the rate of change or ROC. The ROC is a momentum oscillator that measures the percentage change in the current share price compared to the price 9 trading days ago. It uses a zero line as the benchmark, where values above zero indicate bullish momentum, while values below zero indicate bearish momentum. Currently, HLCB records an ROC value of negative 2.52%, which is below the zero line, indicates that the stock is experiencing accelerating downward momentum, meaning selling pressure has been stronger than buying pressure over the past 9 trading days. This negative reading also supports the recent decline in the share price towards the 3.09 support level. Next is the Relative Strength Index or RSI. The RSI measures the strength of recent price movement on the scale of 0 to 100. Generally, a reading above 70 indicates an overbought market, while below reading 30 signals an oversold conditions. The 50 level represents neutral momentum. HLCB currently recorded an RSI of 32.60, while its signal moving average 39.74. The RSI has fallen below its signal line and is approaching the 30 oversold threshold, indicating that bearish momentum remains dominant. However, because the RSI is close to the oversold region, it also suggests that the selling pressure may be nearing exhaustion and a short-term technical rebound could occur if buying interest increases. Third indicator is the Moving Average Convergence Divergence or MACD. The MACD measures trend directions and momentum by comparing the 12-period and 26-period exponential moving averages. For HLCB, the MACD line is negative at 0.037, while the signal line is at 0.032, with a histogram value of negative 0.06. Both lines remain below the zero lines, and the MACD line is positioned below the signal line, accompanied by negative histogram bars. This confirms that bearish momentum is still dominant and that no bullish crossover signal has appeared, meaning the current downtrend remains intact. Finally, we have stochastic oscillator, which compares the current closing price with its price range over the last 14 trading periods. The indicator identifies overbought conditions above 80 and oversold conditions below 20. Currently, the %K line is 4.55, while the %D line is 4.99. Both values are far below the oversold threshold of 20, indicating that the HLCB is in deeply oversold conditions. This reflects extremely strong selling pressure, also suggests that the downside momentum may be overstretched. Technical analysts often interpret such as reading as an early signs that the stock may enter a period of consolidations or experience a short-term rally, particularly if buying volume begin to increase near the 3.09 support level. In conclusion, all four momentum indicators ROC, RSI, MACD, and stochastic oscillator consistently point to strong bearish momentum in HLCB. However, the RSI for 32.60 and the stochastic reading of 4.55 and 4.99 indicate the stock is approaching extreme oversold conditions. Therefore, where the prevailing trends remain bearish, investors should monitor for confirmation signals such as increased trading volume or a bullish MACD crossover, which could indicate the beginning of a technical recovery.
Thank you, Nur Farahin. Now I will present the analysis of Sunway Berhad. Sunway Berhad is a diversified Malaysian company listed on Bursa Malaysia. Its main business include property development, construction, healthcare, and education. Our analysis focused on its price movement, momentum, supply and demand zones, and resistance levels. On 14 July 2026, Sunway closing price was Rm 5 ringgit 25 cent and it's increased by 4 cent or 0.77% with a trading volume of 2.27 million shares. Currently, the stock is moving from a corrective phase toward a possible bullish trend. Next, I will explain Sunway Berhad 1-year historical stock performance from July 2025 to July 2026. As we can see from this chart, the stock shows a lowest price of approximately 4 ringgit 70 cent and a highest of approximately 6 ringgit 10 cent. The price initially showed a bullish trend and reached its highest level in March 2026. After that, it entered a corrective phase and declined sharply. Recently, the price has started to stabilize around 5 ringgit, which acts as an important support level. This suggests that the selling pressure may be weakening. However, further analysis is needed to confirm a new upward trend. Next, I will explain Sunway price and volume pattern over the 3-month period from May to July 2026. As we can see from this chart, Sunway initially followed a downward trend during May and June. However, in July, the price began to form a possible bottom and show sign of recovery. The main support level are 5 ringgit 10 cent and 5 ringgit. 5 ringgit is an important psychological level and the lowest price recorded during this 3-month period. The immediate resistance is 5 ringgit 31 cent, while the major resistance is 5 ringgit 50 cent. Bullish semi-candlestick appear near 5 ringgit on 9 and 10 July. This candlestick show that the buyer rejected the lower price. The price then increased to 5 ringgit 25 cent on 14 July, supported by moderate trading volume. Overall, buying interest is beginning to appear, but it remains cautious. A stronger trading volume is needed to confirm whether the stock can continue recovering and break above the resistance level. Now, I will explain Sunway moving average indicators. As we can see from this chart, the 10-day simple moving average or SMA10 is 5 ringgit 11 cent, while the 100-day simple moving average or SMA100 is 5 ringgit 33 cents and Sunway current price is 5 ringgit 25 cent. Since the current price is above the SMA10, this indicates that the stock is showing a short-term recovery. However, the price remains below the SMA100, which suggests that the long-term trend still has a bearish bias. So, the stock is improving in the short term, but it needs to move above 5 ringgit 33 cent to provide stronger confirmation of long-term bullish trend. Next, I will explain Sunway moving average envelope. As we can see from this chart, the upper band is 5 ringgit 68 cent, the middle band is 5 ringgit 17 cent, and the lower band is 4 ringgit 65 cent. Sunway current price of 5 ringgit 25 cent is above the middle band and is trading in the upper half of the envelope. This indicates that the stock is moving away from the lower boundary and showing positive short-term momentum. This is also supported by the positive 9-day rate of change or ROC9 of 3 ringgit 14 cent. Overall, the envelope indicators suggest that short-term buying momentum is improving. However, the price remains below the upper band of 5 ringgit 68 cent, which may act as a potential resistance level. Next, I will explain Sunway Bollinger Bands. As we can see from this chart, the upper band is 5 ringgit 36 cent, the middle band is 5 ringgit 17 cent, and the lower band is 4 ringgit 78 cent. Sunway current price is 5 ringgit 25 cent, which is trading between the middle and upper bands. The bands are currently becoming narrower, creating what is known as Bollinger Band squeeze. This shows that price volatility is decreasing. A squeeze often followed by a stronger price movement in either direction. If the price closed clearly above the upper band of 5 ringgit 36 cents, it may indicate a possible upward breakout. However, the breakout should be supported by stronger trading volume for a confirmation. Next, I will explain the rate of change or ROC indicator. The ROC measures the speed and direction of the stock price movement over a specific period. As we can see from this chart, the 9-day ROC is positive at 3 ringgit 14 cents, which indicate positive short-term acceleration and improving buying momentums. However, the 100-day ROC remained negative at minus 8 ringgit 38 cents. This shows that the stock is experiencing pressure from its long-term correction. Overall, the two ROC values present a mixed signal. Sunway is showing positive momentum in the short term, but its long-term performance remains weak. Therefore, the current movement can be viewed as a short-term recovery within a long-term corrective trend. Next, I will explain Sunway Relative Strength Index or RSI. The RSI measures the strength of strong price momentum on scale from 0 to 100. As we can see from this chart, Sunway current RSI is 44.70. Since the RSI is above the midpoint of 50, it indicates that buying momentum is slightly stronger than selling momentum. Therefore, the stock is currently in the neutral bullish position. At the same time, the RSI remains below the overbought level of 70. This means the stock is not yet overbought and still has a room for a further appreciation. Overall, the RSI supports the possibility of continued short-term recovery. However, confirmation from other technical indicators is still needed. I will explain Sunway Moving Average Conversion Divergence or MACD indicator. As we can see from this chart, the MACD line is minus 0.031, while the signal line is minus 0.050. The MACD line has recently crossed above the signal line, creating a bullish crossover. The histogram is also positive at 0.019 with emerging green bar. This indicates that short-term buying momentum is increasing. Overall, the MACD provides a positive signal and supports the possibility of short-term price recovery. However, confirmation from price movement and trading volume is still needed. Next, I will explain Sunway Stochastic Oscillator. As we can see from this chart, the percentage K value is 89.29, while the percentage T value is 74.96. Since the percentage K is above 80, the indicator has entered the overbought zone. This shows strong short-term buying pressure and positive momentum. However, the high reading also suggests that the stock may be temporarily overextended. Therefore, the price may experience a minor consolidation or short-term pullback before attempting to move toward a higher resistance level. Overall, the stochastic oscillator indicates strong immediate momentum, but investors should remain cautious because the stock is approaching an overbought condition. Finally, I will explain Sunway price trend forecasting and technical recommendation. Based on the technical indicators, Sunway has a sideways to bullish short-term outlook. The price remains above the key 5 ringgit level. The MACD show a bullish crossover and the price trading above the SMA 10. However, the stochastic oscillator indicates an overbought condition. The price is also approaching the resistance area between 5 ringgit 31 cents and 5 ringgit 36 cents, which may limit further gains. Therefore, investors should wait for a confirmed breakout. A possible entry may be considered if the price closes above 5 ringgit 31 cents with strong trading volume. The stop loss level is 5 ringgit 10 cents, while 5 ringgit remains the key support level. A breakout above 5 ringgit 33 cents, which the SMA 100, could confirm a strong bullish trend. In terms of the portfolio management, Sunway provides exposure to property development, construction, healthcare, and education. Combining Sunway with Hong Leong Capital Berhad may improve diversification because both companies operate in different industries. Sunway offers growth potential while Hong Leong Capital provides exposure to financial service. Overall, Sunway may have created a more balanced portfolio. However, investors should remain cautious and wait for a confirmed breakout before entering the market. And that's all from us. Thank you.